Hey traders, it's BA here. It's Saturday, February 25th, 2017, and today we're going to spend a little time and go through Friday's recap for the last week. So let's go ahead and delve right into it and see how we fared for the week and all of our weekly levels. First thing we're going to take a look at is the S&P. Hey guys, the S&P just keeps powering up. We talked about the records. It's just continuing to set records one day after the other. It's in a mode that we've never seen before. The number crunchers, the data crunchers, this is just a historic move. We haven't had a down move hardly at all. Everything just goes up every day, every night. Every time it even tries to sell off 5 points, it gets bid up 15. So just a very unusual market. The breadth in the market is still really, really horrible, but it just doesn't matter. Nothing matters. Our favorite data crunchers at Sentiment Trader, they said that they've had a few other periods since they've been doing this in the last 2.5, 3 decades where they've experienced this many failures in their models to accurately portray an extreme move, and this is one of the most rarest that they've ever seen. So these markets are nothing works, no form of analysis. I'm still short the stock market, guys, from about the sorry about that. Let me go back up. From somewhere around these levels right here. I'm still short the stock market right in here. I just keep selling puts against it. One day we'll get a 5% pullback. When we do get the 5% pullback, guys, this market's going to go a lot higher. We're not in that blow-off phase yet, but I will tell you, we're there. This is what I've been talking about for 3 years. We're there. So just be prepared. We're starting to get into an environment where the Fed knows they have to raise interest rates. Okay, and we've mentioned throughout the last 3 years or so that one of the key areas for us to get into is stock market at all highs, screaming up, and bonds around 4 to 5%. That'll be the telltale area. Once we get into, then we really need to start looking at exhaustion moves in this stock market. But it's going to go a lot higher, guys. There's too many things bullish about this stock market, no matter what else is happening. Nothing's stopping it. So, but anyway, our levels held for the week. We didn't probe first level, and so that's the S&P. All right, the bonds. I'm bullish on bonds, even though stock market continues making a new high every day. So that trade's working out pretty good. I'm really close to the profit target in my bond position. But we went through first level this week, just a really strong move in the bond market, in spite of a very strong stock market, in spite of the Fed not even telling everybody that they're going to raise rates. So we got some underlying things in this market, guys, that are just keeping this thing, all markets right now. I mean, all markets. All right, so bonds, let's look at crude. Crude's still in that tight range, even though it's at the upper end. We're up here. It probed a couple of times at that high that it keeps trying to bust through, but we were between our levels for the week. So the crude market's just wound really tight, guys. When it makes a move, whenever it decides, whatever propels it, it's going to be huge. Another really, really huge move in the crude market. You don't wind a market up like crude and just hold it from. I mean, look, guys, ever since we jumped up into this range right here in December, I mean, you draw a line across there and, and then turn it into a rectangle. It's been trading inside that range since the first part of December. That is just really unusual for the crude market. Energy stocks are getting creamed. So I don't know what that means. But anyway, I'm still got a strangle on. We'll start checking for large meetings in the OPEC, in the crude market with the OPEC guys, because that could impact our non-directional trades. I don't want to get stuck in one of these things, put a strangle on it to 25 level IV when we get a meeting in another less than a month, and they're going to pump in, another 25-30% IV on top of it. So that'll just be a bad news. So we're going to take a look at that here this next week. See if we can come up with a reasonable projection of when we think they're going to start pumping IV into the crude market. Dollar pretty tame this week, just rocking back and forth in between the levels that we've set for the week. Bullish move in gold. So we talked about the trade of the year for me, which I got out right there. The bottom would come up, higher low, go up. We talked about this being a higher low when the market was right here, and sure enough, it held. It didn't come back down test. Instead, it just rocketed higher. So gold's in a bull market right now, guys. Haven't taken a look at the miners, but gold is in a powerful move. I would take a look if you're interested in trading maybe silver or platinum and see how they're doing relative to gold. Anyway, that's it for our weekly levels. So what I would like to bring up right now is the stats for the weekly levels. Let's take a look at that right quick. Give me just a second here to jump over to, let's see. There we go. All right, guys, this is, as you know, as a result of the weekly levels that I keep track of, those first and second levels, I'm really curious how many times the markets trade through those levels for the week. Very important information for somebody like myself. I use it every week in the positions that I trade. It's always my first point of reference to see where the market is for the week, what the probabilities of that market going into those first or second levels. So let's take a look. All right, so we've been keeping real-time stats on this for 30 weeks now. And just look, the S&P has only closed beyond that first level in a 4-day period. So I plot these levels on Monday, and then they're good for the week through the close on Friday. So I'm interested in Monday through Friday, those levels, just to give me a range where the market could potentially trade to. The S&P has only closed beyond the first level 2 times in 30 weeks. 93% of the time it stays in between the first level. It's only closed beyond the second level once in 30 weeks. Okay, I find that just incredible. That is so statistically aberrational. Over time, it will normalize. So what that means is that when we get into a period of volatility, we're going to stay in a volatile period for quite some time. Guys, it's just numbers. It's all it is. It has nothing to do with anything other than decades and decades and decades worth of numbers that bear themselves out over time. So we're in one of the tightest ranges in the S&P ever, where it never goes down. Anyway, let's look at the bond market. ZBs, first level, they've closed beyond the first level 10 times, which is 66% of the days. The other markets are right in line, 66 to 70%. That's right in line with the statistical probability of those markets closing beyond those levels for that 5-day period. So you can see your second levels, that's exactly where it's supposed to be, roughly 93-94%. So it's right spot on. Okay, so that's just a look at the percentage for the levels. Again, it's very important for me. If crude makes a hard run to one side, and first thing I pull up are my levels for the week. Hey, how close are we to the first level? How close are we to the second level? I want to know, because 93% of the time the crude market, 96% of the time the crude market stays in between the second levels that I plot, on a weekly basis. So that's information I want to know. All right, guys, that's a wrap on the stats. That's a wrap on our Friday recap. So I hope you guys have a really nice weekend, and just stay tuned. I'll post the current portfolio performance stats. Those will be posted as well. Hey, this is BA signing off.